Hello, everyone. Welcome. We're going to give it just a couple minutes here to allow other people to join, and then we will get started. So hang tight. Just going to give it another minute here for people to join. Started soon. All right, let's go ahead and get started. Hi, everyone. Welcome. Thank you for joining our webinar today. My name is Teresa Donahue. I'm the Brand Engagement Marketing Manager here at Volusion. And here at Volusion, we want to ensure you, our merchants, receive an all-in-one e-commerce experience so that you have all the tools and the support that you need to successfully grow your business. And we're able to do this by partnering with experts like Avalara. And today we will be discussing what makes managing tax compliance so challenging, and then highlighting some new technology that can lighten the load for business owners like yourself. Before we get started, just a couple housekeeping items to go through. If you have any questions throughout the webinar, please submit them during the webinar. We will be answering questions live. But if we don't have time to address all the questions today, we will follow up with you directly and also include those questions and answers in our follow-up email tomorrow. And we'll also include the recording to today's webinar in that follow-up email tomorrow. So keep an eye out for that. And to learn more about how Avalara can help you in your business, we'll include all the contact information and resources to you today and also in the follow-up email tomorrow as well. And so I'm super excited. We have Kate and Christine, tax compliance professional from Avalara with us today. And they're going to walk you through navigating challenges when it comes to tax compliance. So I will hand it over to Kate now.
Thank you, Teresa, so much. We love our time spent with you and the Volusion team, as well as their merchants. Have had the opportunity to meet many of you wonderful folks over the years, and it's always exciting to learn about your businesses, learn about the challenges that you are facing, and to hear exciting things like growth and new opportunities. So I am Kate Baholski. I am on the sales team at Avalara, and I am aligned to work directly with Volusion merchants. My information will be at the end of the email. My email, you can reach out to me as well as anyone at Volusion to get my information. And also at the end, we are going to have a fun little poll. We always find it interesting to learn about your specific needs and questions. So stay tuned for the poll at the end. And I am going to go ahead and introduce Christine Martin. We're going to have a couple slides here, a couple of quick disclaimers and our safe harbor statement here, just letting you know kind of who we are and what this is all about. and I will go ahead and turn it over to Christine.
Hey everybody, I'm Christine Martin. I'm a senior solutions consultant here at Avalara. I spent more than 15 years in industry as a tax manager at some pretty large companies. And 14 years ago, I joined Avalara. So I kind of bridge this gap between the technology and the functional side of tax compliance. So what are we going to talk about today? One, we're going to talk about Nexus, really important information for e-commerce companies. We're going to talk about exemption certificates, calculating tax, consumer use tax, the filing, e-invoicing, cross-border, the Avalara compliance suite, and we're going to save some time for Q&A at the end. And again, there is a poll at the very end too that's going to be helpful as we prepare for other webinars and information that we share with you as well. So let's talk about this complexity of tax compliance. And I lived in this space on your side of the desk, and all these things that I thought about every single day, every single week, there's an awful lot. How do I do this tax research? What about all of these exemption certificates? I need to find one for an auditor. What about property tax, the consumer use tax? That one's super hard. There's all of this stuff that businesses have to think about every day, every week. And really, this is the challenge for you guys. And that's where Avalara steps in to reduce some of those challenges for you. So how do we do that? And let's talk about the challenges too. First one, and this is a really hard one, know your nexus. So there's a whole bunch of activities that create nexus for businesses. And a lot of e-commerce companies we found don't take into consideration all of these things when they're looking at where they should be charging tax. What's giving rise for them to need to charge tax? Do they have people that are selling on their behalf? Do they own property? Is their product sitting in a warehouse somewhere? If any of you guys are selling through Amazon FBA and your property is sitting in an Amazon warehouse, that gives you nexus. And keep in mind, Amazon can take your products from one warehouse, move it to another state, which then gives you nexus in another state as well. If you're going to trade shows and taking orders at those trade shows, that may give you nexus as well. So on top of all of those things that we were just looking at, you guys also have to keep track of where you've created a presence in a state and where you may have to register and begin collecting and remitting tax. And years ago, there was this groundbreaking Supreme Court case, South Dakota versus Wayfair. And what South Dakota was trying to do was say, hey, Wayfair didn't have a physical presence in our state, but because of all of the sales into the state of South Dakota, they had created an economic presence for themselves. Well, the Supreme Court said, yep, South Dakota, you can go ahead and require people to register because they've created an economic presence. And as you can imagine, a whole bunch of other states jumped on that bandwagon and said, we're going to enact economic nexus thresholds and require more and more people to charge and remit tax. And this is just a visual of these rules and the states that have enacted economic nexus laws. It would be absolutely silly if every state did the exact same thing. I probably wouldn't have had a job as long as I had. But this adds to this complexity. Where do you have nexus? What is driving this economic nexus threshold? Where are you required to register? So I really would like for folks to make sure that you're double checking your tax obligations. Track the sales that you're making, even if they're exempt sales. Make sure that you understand where you're creating economic nexus. And if you have a question about whether or not that you've created economic nexus, we do have a risk assessment that's available to you where you can put in information and we'll return back saying, hey, we think you need to register in a few places. So let's talk about this next piece. You've created economic nexus or you've got a physical presence and you've already registered, but a lot of your customers are tax exempt. Well, what the heck you do with these exemption certificates? How do you collect them? How do you manage them? How do you renew them? How do you find them when an auditor wants to see them? So understanding exemption certificates is hard, it's complex, but it's really important. Back in the day when I worked at a lodging company, when an auditor came in and said, I see you didn't charge tax to these customers, give me a copy of those exemption certificates. Well, I would have to call the hotel. The hotel would dig through 3 years worth of folios to find one piece of paper. And in most instances, they couldn't find that piece of paper. Then we would start negotiating with the auditor on why I couldn't find a piece of paper and why I didn't charge them tax and why he shouldn't assess me tax on things. Later on, when I worked for a telephone company, I would give the auditor a list of all of my exempt sales and he'd say, great, now I want to see those exemption certificates. We had all of our certificates in binders in a room. And my first couple audits, I did the right thing. I went into the room. I tried to find those exemption certificates. After 2 or 3 days of looking for the needle in a haystack, I just called the customers and asked for new certificates. So having a place that you can store them, manage them, retrieve them is really important. But you also have to know what makes a certificate valid. What fields need to be filled out? Are they signed? Are they dated? Are all the applicable fields completed? That piece of it takes time. And who are you relying on to make sure that all of those things are completed and this document is accurate? I'm always surprised when we talk with customers and they say, oh yeah, this person gave me a copy of their driver's license. Is that okay? No, we've seen copies of social security cards, of passports. Passports may suffice in some instances. But what about the taxability challenge as well? If we think about this combination of things that are taxable, things that may be non-taxable, and things that are taxable, but I've got a piece of paper that says, don't charge tax on these things. This is this product taxability challenge. If you guys are selling software, how do you know whether or not to tax it? If it's a physical copy of software, it's taxable. If it's purchased electronically, it's not taxable. Servers, hardware in Iowa, if it's purchased by a business, it's not taxable, but by an individual, it's taxable. All of these things add to this complexity. So let's keep going with this exemption certificate challenge. Nexus is really hard to understand, right? There's so many different things that drive whether or not something creates economic nexus. 2, you've got all points of opportunity to make sales online, in person, wherever that may be. Somebody has to be able to capture these exemption certificates, know when they're applicable, and store them someplace, but also update customer records. You've got to be able to keep track of when they expire. I think of Florida. The Florida exemption certificate expires December 31st of every year. What I've seen most times happen is somebody goes into their accounting system, they mark a customer as exempt. They're exempt in every single state, regardless of who they got a certificate for. And those certificates, those customers are exempt forever and a day. Who's actually managing, oh, these Florida certificates expire December 31st. I need to get new ones. So tracking those expirations, making sure you get new ones adds to that challenge as well. And then I go back to this, how do you retrieve them? When you need to get them for an auditor, how much time are you spending looking for exemption certificates? Is it the needle in a haystack? What if you've had a flood or even worse, a fire? What happened to all of those exemption certificates? Finding these certificates when you need to for an audit is challenging. And some of the examples that I gave you, if you're missing one exemption certificate, that one exemption certificate creates an error factor for you in an audit. Right before this webinar, I got off the phone with somebody that was audited. They were missing 3 exemption certificates for a 3-year audit period. It cost them $100,000. because they couldn't find them. So being able to find these certificates really helps reduce your exposure for missing certificates. I know I used to spend an awful lot of time when I worked for a paper manufacturer looking through, what does my future audit exposure look like? If every state came in and asked to see every exemption certificate, what would that look like financially for us? The first time I did that analysis based on a study that I had done, I gave that number off to our CFO and he kind of laughed and said, Christine, that's too high. You've got to do better than that. And my answer was, well, we've got to do better at collecting exemption certificates. So we put some processes in place to reduce that future audit exposure. So now we've talked about this nexus challenge. How do I know where I have economic nexus? How do I know where I have physical nexus? Then we talked about collecting exemption certificates. Every place that I am registered to collect tax, I need to have something in place if I'm selling to exempt organizations. Well, now I've got those two things under control. How the heck do I charge the right tax? That really becomes this challenge. And if we look at e-commerce and what's happened over the last 4 or 5 years, is there has been a drastic increase in the number of sales that are happening electronically. On one hand, we could look at COVID, right, and see that more people are not going into stores. They're buying things online because they just couldn't leave their house. So now being able to track and apply tax to all of these transactions really becomes problematic. And if you look at this 96% increase of how people are making sales and buying things since COVID, I mean, it's really important for folks to understand how they can systematically apply tax, the right jurisdiction, and the right taxability. And I use Colorado as a great example, and I could even use my old house in Georgia as a great example on what makes this so hard. The United States is fairly unique in that we've got all of these jurisdictional boundaries. Some people think, I'll just apply the tax based on a zip code. Well, zip codes are great for delivering mail, but they're not great for assigning a jurisdiction. So my old house in Georgia, Swanee, Georgia 30024, is in 3 counties in 3 different rates. So in this example, I could look at Greenwood Village 80111, and if you see these different colors in this boundary for Greenwood Village, those are all different taxing jurisdictions. So again, a zip code is great for mail, but not for assigning jurisdictions. There's got to be a way for you to assign a jurisdiction based on a street level address. And if we think about more complexity, there's over 13,000 tax jurisdictions here in the United States, and that's just sales tax. If we looked at lodging, telecommunications, those 2 jurisdictions probably double the amount of tax jurisdictions in the United States. So sales tax is much easier than some of these other industries, communications, lodging. And that doesn't necessarily mean that 2 states or 2 jurisdictions have the same taxability or even have the same tax rate. There was probably about 10, 15 years ago, there was a group of states that got together and said, hey, maybe if we streamlined the definition of things, maybe more people would voluntarily become taxpayers out of the goodness of their heart. And they spent an awful lot of time talking about the definition of candy. And Tootsie Rolls, as odd as that seems, really became part of this conversation. Tootsie Rolls had more flour than sugar. And based on this definition that they had come up with, Tootsie Rolls didn't fall into this definition of candy. They spent days talking about how to define candy. And out of all of this came this streamlined sales tax project of a way before the South Dakota versus Wayfair case. But it was this group of states saying, we want more people to become taxpayers. Let's make it easier. It made it easier for those states that joined in, but not every state joined in. So what if there was a way that you could allow your customers to hit the purchase button, and validate that address. And validating that address to me does two things. One, it helps assign the right jurisdiction to a street level address. If we think back at that Swanee, Georgia 30024, that's not necessarily going to get me the right jurisdiction. But if I look at the street level address, it will. But there's a secondary component to this address validation piece in addition to assigning the right jurisdiction. And that part of it is every time FedEx and UPS has to change an address for you, they charge you $20. How much money are you spending with FedEx and UPS for them to change addresses? If we're validating the addresses in the United States and Canada to valid US Postal Service addresses, maybe that cost will come down. And you're assigning the right jurisdiction to a transaction. So after an address has been validated, then there's sourcing rules that apply. And if we think about California and Texas are probably the hardest for me, for anybody, is things may be taxed based on where the purchase originates. They may be taxed based on where the purchase is shipped. Or in cases like California and Texas, it's a hybrid of those. How do you manage that? After those sourcing rules are applied, a jurisdiction is assigned, or multiple jurisdictions may be assigned. And then checking that exemption status. Is there an exemption certificate on file for that state that's valid and not expired? Identifying how the products that you're selling are taxable. Verifying whether or not those items are part of a sales tax holiday. I really don't know how people manage sales tax holidays when they're managing these sales taxes on their own. Applying the right tax rules and regulations. Sending the correct tax back to checkout. So if we think about steps 1 through 8, all of these things can happen in less than a second. So it doesn't impact the user experience. If any of you have been on the phone or bought anything online and there was a pop-up window that says, "Did you mean this address?" There's a pretty good chance that was Avalara giving you this address validation piece. And then further on in that process, you'd notice that there's tax that's in your shopping cart, but it didn't take long for that to happen. So if we think about this Avalara Volusion process, it's leaving Volusion, calling Avalara with a street level address, with the items that are being sold, and Avalara's checking for an exemption, looking at the taxability, validating an address, calculating tax, not just returning a rate, but calculating the tax and sending it back to that shopping cart so that your customers are taxed correctly and you're in compliance. And all of that information is then stored in a single place so that taxes can then be reported. Let's talk about this next challenge. And for me, consumer use tax is probably the hardest. Sales tax is hard. Consumer use tax is harder. What is consumer use tax? You buy things that should be taxable, but what if your vendors aren't taxpayers in the state that you bought it? You're then required to self-assess and remit those taxes yourself. You as the consumer are required to remit those taxes yourself. If you guys use TurboTax or any of those online income tax reporting tools as individuals, one of the questions that pops up is, did you buy anything online where you were not charged tax? Well, that's the state's way of getting from you, an individual, this consumer use tax. The vendor didn't charge tax, what you bought was taxable, and you need to self-report it. Businesses have the same thing, but it doesn't go with their income tax return. I'll give you some examples of consumer use tax that I experienced. When I worked for the paper manufacturer, we had all of our computers shipped to our office in Georgia. Our IT people did their magic to those computers, and then we shipped those computers out to the plants. Well, what happened was I was paying 6% sales tax in Georgia when I bought those computers, but I then shipped those computers into jurisdictions that had tax rates higher than 6%. I owed the consumer use tax on the rate difference. If I paid $6, but the jurisdiction that I shipped those computers to was at 9.75, I owed an additional $3.75. So I had somebody that spent 3 days a month looking through invoices to figure out what that tax variance was between what I paid versus what it should be based on where those computers went. One of the other things that we looked at on the consumer use tax piece was repair and replacement parts, things in our warehouses that we were buying, or if we were moving things from one manufacturing facility to another manufacturing facility. There are so many things that can trigger consumer use tax. Giveaways. If you have influencers that you're using and you're giving them promotional packages, you're not charging them tax because it's a $0 invoice, but there's still tax that's owed on the value of those items given away. And that's where consumer use tax is. You owe tax on the items that you gave away for free. You took them out of inventory. You didn't pay tax on them when you originally bought them. You still owe this consumer use tax. Consumer use tax is super hard. So we've talked nexus, we've talked exemptions, we've talked taxability, we've talked consumer use tax. Well, what do I do with all of this tax that's been collected from my customers or that I've charged myself? All of this tax has to get reported to a tax authority. These are not your funds that you can use to manage your business. You could ask some executives from WorldCom what happens if you collect tax and don't remit it. You may have to go to a gated facility to ask them that. But you are acting as an agent of the state by collecting those taxes. If you collect $100, you have to report $100 to the jurisdiction. And again, it would be silly if every state had the exact same filing requirements. There's no two states that necessarily do it the same way or even have the same tax forms. All of these things are different. But what if you've got multiple sources of data? You've got Volusion, you've got Amazon, you've got an ERP that you're collecting all of these transactions. There's got to be a way to aggregate all of this data. How do you do that? There's an awful lot of time that is spent pulling data from multiple sources, putting them in spreadsheets, and it in such a way that you can then file the returns. One of the CIOs that I work for said, humans are bad, humans make mistakes. So anytime you have human involvement in gathering data from multiple sources, there's always room for error. So managing these returns is hard. There's thousands of tax forms, and there's hundreds of ways to file these returns and make these payments. Some states require mandatory online filing. Not all local jurisdictions require online filing. The states change their websites. The states also require some large taxpayers to make prepayments. If you don't get a notice, guess what? You're still required to make those prepayments even though you didn't get those notices. There's timely filing discounts that you can claim if you file a return on time and you pay that return on time. But if you don't pay it on time, there's penalties. I think of Florida's penalties. If you don't pay on time and file on time, it's 5% of the tax due, up to 50% just for filing late. So this managing of filing and remitting these taxes becomes so important and time consuming, right? Who's due on the 15th? Who's due on the 20th? Who's due on the 25th? We used to have to plan our vacations around tax filing due dates because we didn't have an automated system to be able to do these tax returns for us. We had to do them ourselves. So our vacations were usually between the 1st and the 10th of the month or from the 25th through the end of the month, just because we had so much work to do in the middle of the month, getting those tax returns filed and paid. But something else to think about when it comes to these filing and return payments is when an auditor comes in, and this always makes me chuckle, he says, hey, I want to see a copy of those tax returns that you filed. My first thought when I started was, well, didn't I file them with you? Can't you file them? Can't you just pull them up yourself? Well, they wanted to check our records. So you've got to have a way to be able to find those historical returns that you filed so that you can provide them to an auditor. Every single auditor that I ever came across always asked for copies of tax returns. We have seen this uptick in influencer selling, right? You go on TikTok or Facebook or Instagram, and people are pitching other people's products. And they're getting a commission every time somebody clicks on a link to buy something from them. And really, this puts a target for the IRS on you as a company and those individuals as well. There is all kinds of information that you have to gather from those folks and give them every single year for income tax reporting purposes. And this becomes a challenge, right? You want people to pitch your product and you want to be able to pay them commission, but you've got to, one, get a W-9 from them. The best practice is to get a W-9 from them before you ever give them their first payment. Because you may give them their first payment of $600 and reach that threshold for 1099 reporting, but then they go away. How do you find them to get a W-9 from them? So I ask you guys, how are you collecting W-9s, validating taxpayer ID numbers, validating addresses from influencers, from contractors, from freelancers? Make sure that you're getting a W-9. Make sure that you're storing it in a safe location, because there is really important information on those W-9 forms that you can be penalized if some nefarious character finds those and uses that information. But not only are you required to gather these W-9s, but once a year, and everybody's probably already experienced this, is you also have to give them 1099s. And how are you guys doing that today? You've got to filter through this list. You've got to send an electronic file to the Internal Revenue Service. You've got to send these 1099s to each of these people. But how do you send it to them? Some people want them electronically, but they've got to opt in to get them electronically. This really becomes this challenge of W-9, 1099s as well. The easy way to send 1099s obviously is electronically, but again, people have to opt in for this. So how can Avalara help with all of these things? We've talked about 5 challenges. I could spend hours talking about the challenges that are associated with this. We gave you the top 5. So if we think about where Avalara fits into this, one, at this very top, we've put you in the middle. And really, there's tax on both sides of this. There is the customer side that you're selling to, but also the purchase side of things that you're purchasing, that consumer use tax piece. And we've broken down what Avalara can do for you really in a couple different ways. One, we call them our core products. It's our tax calculation engine for the sales to your customers, but also on the purchase side, that consumer use tax as well. We've got that exemption certificate tool to give you a single source of truth for storing exemption certificates, being able to manage when those expire and easily find them for an audit. We're giving you a way to gather all of this information and then prepare returns. You don't necessarily have to have a staff of 10 people to do tax returns who knows all of these things that want to go on vacation between the 15th and the 25th of the month. We've got a tool that can capture all of these transactions, all of the tax that's been calculated, and put them on a tax return. And we know that a lot of businesses are going outside the United States. And what's happening overseas is this concept of electronic invoicing and live reporting, where there's some countries that say, we want to see that invoice before it ever gets to your customer because we want to validate the tax that you're billing your customers. But it's also a way for those governments to know, hey, they've billed $10 in tax. I need to make sure that we get that $10 from them. So we're seeing that e-invoicing and this live reporting outside the United States is picking up steam, and that's something that we're offering our customers too. But layered on top of these core products that we have, we've got some other supporting products that I think are really beneficial. I think about item classification. If I were to pick up a thing of hand sanitizer and there's a UPC code, every single hand sanitizer like this has the exact same UPC code. We've got a massive library of UPC codes to Avalara taxability codes. So understanding how each of those UPC codes are taxed, we've got a solution to help you create that relationship between what's being sold and how things are taxed. And along with that, we've got a tax research tool. And I was explaining to some of our new folks a few weeks ago about a law library that I used to go into. We had black binders that had onion paper, and somebody asked me, what's onion paper? But I would go in, if I had a question about Texas, I'd pull the Texas binder and I would do some research. If somebody else needed the Texas binder, they had to wait until I'm done. What we've done is taken all of those binders with onion paper and put them in a website that is easier to read. It's not legal speak, but giving you a place to be able to do tax research and even ask tax experts questions. When I worked for the paper manufacturer, I got a call from one of our executives that we were going to buy a new airplane. And he said, Christine, I need you to tell me where's the best place to buy this plane, hangar this plane, rent space for this airplane. And he gave me some parameters. Well, I didn't have a tax research tool like this. I literally spent 2 weeks Googling how an airplane was taxed, how rented a hangar was taxed, all of the charges that I would have to pay for owning an airplane. I spent 2 weeks putting together this analysis. It would have been really nice to have had a tool that I could easily research multiple states at the same time. So we've put something together for you as well. And in addition, we've got so many customers that have multiple locations across the country. Maybe they're retail locations. There's so many licenses that are involved with retail locations. It may be a sign license, a sprinkler license, an alarm license. All of these licenses have to be updated because the last thing that you want is one of those licenses to expire and they come and shut your doors. So we created a business license and registration offering as well. And I want you to think of business licenses in a much broader vein, if you will. One, it can store these business licenses by local jurisdiction. It could even tell you if you're going to open up a new location, say, hey, here is where I'm going to, and I just lost my page real quick. Let's keep going. I'll keep talking while I get back to my page that I was on. So these business license tools can help you do some research so that you know that you are completing the correct business license. But there's business licenses that are needed for, think about HVAC contractors. There's licenses that each of those people have to have, and they have to have certain continuing education credit, and they have to renew those in order to keep working. So what we've done is given you a place that you can even manage those professional licenses as well. And let me keep going to the very end where I was. And we are almost done. Zoom has a mind of its own. So cross-border, we talked about invoicing and live reporting, but know that there are VAT implications and being able to ship products to other countries where you need those HS code classifications are available to you as well. We talked about 1099s and W-9s when it comes to influencer selling, and then we've got a property tax component to all of this as well. And all of these things for our core products, we have created thousands of integrations to ERP and accounting systems, e-commerce like the Volusion, shopping carts, marketplaces, point of sale, CRM, any place that you need a tax calculation, we probably have an integration to, or we've got our API that's available to us. And we're also offering professional services to help you with those risk assessments. If you're just not sure if you've created a presence for yourself, we can help with that. Training, the implementation, the support, and streamlined sales tax as well. There's an organization called Forrester that actually went through and talked to a number of our customers, and they put together this report on what the economic impact on a company is for using Avalara. And they've put together this report that says, hey, you can save X number of hours in this tax compliance world by using Avalara to help with applying the tax rates, managing exemptions with your audits. Here's the efficiency that you gain. It is a fantastic report that is coming out. We're doing a webinar on April 18th. I would highly recommend you go out to our webinar page and you'll be able to register for it. It is a fantastic report, really great insight from our customers. We don't know who they talked to or what they said. It's just a report that Forrester put together that really shows this impact, and all of the areas within a company are impacted by this sales and use tax process. So great report, and a webinar that's coming up on April 18th where we dig into it a little bit more. So with that, I want to open it up with Q&A. We've only got about 5 minutes left. So hopefully we've got some great questions. If we can't get to all of them, I am happy to follow up and send an email as a follow-up as well.
Thank you so much, Christine. That was fantastic. We have had a few questions come in, but before I get to those, I'm going to go ahead and make that poll live. This poll is just kind of so we can get a better idea of what's of most interest to you guys and how our future webinars can better serve your needs. So if you wouldn't mind filling that out, that would be fantastic. Should be live now. And with that, I will go ahead and get to the questions. So the first one we had, Christine, was, is collecting sales tax exemption certificates still important if I live in a state that doesn't collect sales tax?
Oh my gosh, yes. So, and I live in the great state of Montana where there's no sales tax, but I may have a requirement in a number of other states. I still need to collect exemption certificates in those states where I'm registered. And if you think about economic nexus, maybe you hit economic nexus. How are you going to collect exemption certificates for those customers in that new state? That's a really hard task. We've got something that can help you with these campaigns. Think of like a mail merge and an email campaign where your customers can actually complete exemption certificates online. So it's still important, even though you may be located in the great state of Montana, but you're selling in other states. Great question.
Cool. Thank you, Christine. Next one I've got is, if I'm selling in multiple channels, do I need multiple Avalara products?
Oh, fantastic question. So my answer is always depends. So when it comes to a tax calculation, I like to think of Avalara almost as the center of the universe. It's the sun. I could have Volusion talking to Avalara. I can have your ERP talking to Avalara. I can have a second ERP talking to Avalara. It's one Avalara system. So a single source of truth for all tax calculations. When it comes to the tax return filing, you could do the tax returns yourself, or you can allow us to do it. The exemption certificates, you could do them yourself, or you could allow Avalara to manage those exemptions on your behalf. So there's all these different, I'll call them modular pieces that are associated to Avalara. The main core of this is the tax calculation engine, and then other things bolt on top of that.
Awesome. Thank you. Thank you. We've got one more. So if you have any questions, feel free to drop them in there. If not, we can give you a few minutes back. But the next one that we've got is kind of a fun one. How bad is it to wait for them to find me if we have Nexus but don't register?
Oh, that's awful. So well, let's talk about how they find you, right? So how does a state find you if you've never registered? And I've got the craziest story, and people think that it's not real, but it absolutely happened. There was an auditor in the state of Indiana that went to Texas with his family, and he went to the Houston Space Center. Well, our company managed the Houston Space Center, and somebody had this great idea to have a catalog where you could buy a spacesuit and freeze-dried ice cream. And in this catalog, on the order form, it said, if shipped to Texas, add sales tax. Well, our company was huge all across the United States. And this Indiana auditor was like, huh, that's really weird. He went back home, went to work and said, hey, boss, look at this. They're only charging Texas tax on these orders. So we got audited. The auditor comes in and he's like, hey, can I see all of your catalog sales? And me in the tax department, I was like, what catalog sales? And before long, I had all the big states, Florida, New York, California, Illinois, Washington, coming in and auditing and asking about those catalog sales. So it could just be a random way that the state finds you and says, hey, now you got to pay up and you got to pay penalty and interest. If you are proactive and you register beforehand, or you're proactive and say, God, I should have been a taxpayer a year ago, there's what we call voluntary disclosures, where Avalara can go on your behalf to a state, say, hey, we've got somebody that should have registered last year. They haven't collected the money. They want to come clean, but will you waive the penalty and reduce how far back they're going to look? So there are benefits to being proactive and saying, hey, I should have done this. I'm going to come clean and take care of this now, as opposed to waiting for them to fine you, because they're less likely to waive those penalties.
Awesome. Thanks, Christine. Looks like that is our last question. Thank you all so much for being with us today. If you have any questions at all, we've got 2 contacts there you can reach out to. Both Kate and Darren would be happy to help, Christine as well. So thank you again for being here today, and we hope to speak with you on a future webinar.
Thanks, everybody. Take care.
Thanks, everyone.